Thank you, Mr. Chairman, and Chairman Massad, thank you for being here today. I was happy to hear yesterday that the Commission announced it will make changes to the margin rule after the bill, my TRIA bill, was reauthorized, and a provision was put in there to help clarify the end user. So thank you for that. I think one of the things that you probably have been hearing from this committee and from, I think, members of Congress is that we want to make sure we protect these end users and bona fide hedgers. And we want to, because these are people that are helping create jobs in the country. Along those same lines, one of the other issues is the position limits. And I think recently the Commission closed comments on a proposed rule on the position limits, further limiting the number of contracts that traders can hold. I've heard from some of my agricultural folks that, particularly from the cotton industry, that this is, and which is vitally important to my district, by the way, that the Commission's proposed rule do not adequately define what a bona fide hedging, what is a bona fide hedging, and what does consider a commercial market practices. And as a result of that, they think there is going to be some confusion about, and may some of these commercial entities that are working with producers, that there could be limiting the ability of them to help manage those risks. Can you kind of discuss what the Commission is doing to make sure that we make that world big enough where our producers can use these marketing entities to help market their products?
Certainly, Congressman. It's an excellent question. And as you know, we've had position limits in place for agricultural commodities for many years. They've worked very well to limit excessive speculation. So I think they are an important tool in our toolkit, and Congress has mandated that we extend those to other commodities. But we must do that in a way that still allows commercial participants to engage in bona fide hedging. Now, that does get complicated as to exactly how you define that. We've taken a lot of input on this issue. We've had a lot of comments. So I want to make sure we listen to market participants on this. Trading strategies are often very complex. At the same time, we need to write a rule that works here. So we're taking our time to try to get this right. And the staff is spending a lot of time sort of thinking about how we can craft these rules so that they work to meet the goal of Congress, which is to limit excessive speculation at the same time as allow for bona fide hedging.
Yeah, I think in general, just on the position limits, certainly we want to have a situation where the bona fide hedgers have the ability to do that. But I think the other thing about position limits is we want to make sure that we provide enough liquidity in the market so that there is space on both sides of that trade.
Certainly. We're not trying to eliminate speculators. Speculators are part of the market. What we're trying to do is limit excessive speculation. So it's important that we get the levels right.
I was glad to hear you talk about cyber, and as the chair of Financial Institutions and Consumer Credit Subcommittee and Financial Services, that's kind of one of our priorities, beginning to look into that for two reasons. One, as you mentioned, to protect the overall infrastructure and the damage that can happen if we have an attack on some of these major entities that help clear all of our financial transactions on a daily basis. But also another piece of that is data. Security of the individuals, the amount of data that personal information and so forth, and proprietary information that many of these entities hold. Can you elaborate on things that your agency thinks that maybe needs to be happening, both from a government standpoint, but more importantly, I think it needs to also have a major private market participation in that as well.
Absolutely, Congressman, and you're absolutely right. It requires the private sector really to do a lot of the heavy lifting here. As an agency, we've taken a lot of steps. We've written in these kinds of issues into our core principles. The Congress, gave us a broad enough authority under the core principles to focus on cyber. We're focusing on this issue in our examinations, trying to make sure that the board of directors of these institutions is taking this issue seriously, that they've got policies in place, that they're following those policies, that they're responding adequately when there's an issue, an identification of a weakness. But we don't do independent testing. We don't have the budget for that. I mean, there are firms. I had a group of banks that I met with the other day, and I asked them how much they were spending on cyber relative to our budget. Told them what our budget was, and all of them said, "Oh, we're spending more than that just on cyber alone." One of them said, "We've got a cyber operations budget and we've got a cyber change budget, and both of them are multiples of your budget." That's the scale of the challenge here. One of the things we'd like to do with more resources is have the ability to increase our exams to make sure they're doing enough. One of the things I want to look at is simply standards that make sure private sector is engaging in adequate testing on their own. We're not going to do the testing, but show me that you've done the testing, whether it's through a third party or your own folks, and show me that you've then responded to the tests. That, I think, is the proper role for an agency like ours in this kind of situation.
Thank you.